All right, let's dive into this. The Intelligent Investor
Yeah.
by Benjamin Graham.
Oh, this is a good one.
It's considered a classic for a reason,
It really is.
and we know you guys are looking for a way to kind of cut through the noise and make sense of the market.
Yeah,
So we're gonna break down some of the key ideas.
absolutely. And I think what's really cool about this book is that it's not about like getting rich quick.
Right.
It's about building wealth like steadily,
Yeah.
strategically, and like without letting your emotions get in the driver's seat.
Yeah. So let's talk about value investing.
Okay.
Um, it sounds simple enough, right? Buy stocks that are trading for less than they're actually worth.
Right.
But how do you actually go about doing that?
Well, think of it like this. You wouldn't buy a house without getting it inspected, right?
Right.
You'd want to know its true condition, its potential problems,
Mhm.
and whether the asking price is actually a good deal.
Yeah.
Value investing is the same principle applied to stocks. It's about looking beyond the hype and the headlines to understand the underlying business, its financial health, and
Yeah.
its long-term prospects.
But the market is constantly, fluctuating.
Right.
How do you know if a stock is truly undervalued or just on like a temporary dip?
That's where Graham's concept of the margin of safety comes in.
Okay.
It's like having a built-in buffer to protect yourself from those inevitable market swings
Hmm.
and from the possibility that your initial valuation was a bit off.
Okay.
Graham himself aimed for a margin of safety of at least 50%,
Wow.
meaning he wouldn't buy a stock unless he believed it was trading for half its intrinsic value.
So let's say a company is truly worth $100 a share.
Right.
He wouldn't touch it unless it was trading at $50 or less.
Exactly.
That's a pretty hefty discount.
It might sound extreme,
Yeah.
but remember, even the most brilliant investors can make mistakes.
Yeah.
The margin of safety protects you from those mistakes. Now, to put this into context, think about some of Graham's famous investments.
Okay.
He bought Geico way back when. It
Oh.
was a tiny auto insurer
Right.
trading for a fraction of what it was actually worth.
Wow.
This massive margin of safety allowed him to ride out the market's ups and downs and
Yeah.
eventually reap enormous rewards.
It makes me think about how much patience is required in
Absolutely.
value investing.
A long-term view.
Yeah.
Resisting the urge to chase short-term gains.
Yeah.
And staying focused on the fundamentals.
Okay.
And speaking of taking different approaches,
Yeah.
Graham outlines two types of investors,
Mhm.
the defensive investor
Right.
and the enterprising investor.
And I think a lot of people assume that one is better than the other.
Yeah,
But he actually presents both as valid paths, depending on your personality, risk tolerance,
right.
and the amount of time you're willing to dedicate to investing.
Precisely.
Yeah.
The defensive investor prioritizes capital preservation and seeks steady, reliable returns with minimal effort.
So that's like, putting your money on autopilot
Yep.
with a diversified portfolio of index funds or blue chip stocks.
That's a great example.
Mhm.
Perfect for someone who wants to build wealth gradually
Yeah.
without the stress of constantly monitoring the market.
But the enterprising investor is more hands-on.
Yes, they thrive on uncovering hidden gems that
Yeah.
the market has overlooked.
So they're like financial detectives,
It's a great way to put it.
scrutinizing financial statements,
Yeah,
analyzing industry trends,
right.
and assessing the long-term potential of individual companies.
Absolutely.
So this approach requires more.
Definitely more time, more knowledge,
Yeah.
higher risk tolerance, but also potential for greater rewards.
Okay, so which type of investor are you?
Well, if we connect this back to the bigger picture,
Yeah.
both approaches are valid.
Okay.
The key is to choose the path that aligns with your individual circumstances and temperament.
Right. There's no one-size-fits-all answer.
And that brings us to one of Graham's most intriguing and enduring concepts,
Yeah.
Mr. Market.
I love this.
He describes this fictional character as your business partner
Yeah.
who constantly swings between
Yes.
irrational exuberance and crippling pessimism.
It's such a brilliant way to personify the stock market's often unpredictable and emotional nature.
It's like having a partner who's constantly offering you deals,
Right.
but whose mood swings wildly from day to day.
Exactly. Some days, Mr. Market might be feeling optimistic, offering you inflated prices for your stocks.
Yeah.
Other days, he's a doom and gloom pessimist, practically begging you to sell at a loss.
So the intelligent investor understands that these mood swings
Yes,
have nothing to do with the true value of the underlying businesses.
absolutely.
So how do you avoid getting caught up in Mr. Market's emotional roller coaster?
That's where things get really interesting.
Yeah.
And we'll be back to discuss that in more detail right after we come
Okay.
back. All right, so we've established that Mr. Market, our unpredictable business partner,
Yeah.
can be a bit of a wild card.
He can be a bit emotional.
Yeah, so how do we,
Yeah.
as intelligent investors, avoid getting swept up in his emotional chaos?
Well, it all comes down to emotional discipline.
Okay.
Remember, Mr. Market's moods are contagious.
Uh-huh.
If you let his fear and greed dictate your actions,
Yeah.
you'll end up buying high and selling low,
Right.
which is the recipe for disaster.
So it's almost like we need to develop a kind of
Yeah.
emotional immunity
I love that.
to the market swings.
Yeah.
Think of it as building a mental firewall
Okay.
between your investment decisions
Yes.
and the daily noise of the market.
So, okay, let's say the market takes a sudden nosedive.
Right.
Your portfolio is flashing red.
Uh-huh.
How do you stay calm and rational when everyone else seems to be panicking?
This is where that margin of safety we talked about earlier
Yeah.
becomes your best friend.
Knowing that you bought your investments at a significant discount
Yeah.
to their intrinsic value
Right.
gives you a cushion to absorb those market shocks.
So it's not just about buying low,
It's not just about buying low.
but about buying with a built-in safety net.
Exactly.
Okay.
And remember, Mr. Market's irrationality can actually create opportunities.
Oh, okay.
For the intelligent investor,
Okay.
when he's feeling overly pessimistic,
Yeah.
that's your chance to swoop in
Got it.
and buy those undervalued assets that others are too fearful to touch.
So in a way, we can use Mr. Market's mood swings
Absolutely.
to our advantage.
You got it.
Okay.
It's about recognizing that the market's short-term fluctuations are often driven by emotion
Right.
rather than logic.
And as intelligent investors,
Yes.
we need to rise above those emotions and focus on the facts.
You got it.
This all makes sense in theory,
Right.
but I gotta admit, it's easier said than done.
It is.
The market can be incredibly tempting, especially when you see others making quick profits.
Yeah.
You know?
You're absolutely right. And that's why Graham distinguishes
Yeah.
between investment
Yeah.
and speculation.
Okay.
Investment is about carefully analyzing a company's value
Right.
and buying its stock with a long-term perspective.
Yeah.
Speculation, on the other hand,
Yeah.
is essentially gambling on short-term price movements,
Okay.
often based on rumors,
Yeah.
hype, or
Yeah.
momentum.
And speculation is where Mr. Market can really wreak havoc.
Exactly.
Right.
If you're constantly chasing the next hot stock tip
Right.
or trying to time the market,
Right.
you're essentially letting Mr. Market control your decisions.
Mm-hmm.
You're playing his game,
Yeah.
and the odds are stacked against you.
So how do we resist that siren song of speculation
Right.
and stay focused on intelligent investing?
Well, for starters, we need to understand that true wealth
Yeah.
is built gradually
Okay.
through consistent saving,
Mm-hmm.
disciplined investing, and a long-term perspective.
It's about planting seeds that will grow into mighty oaks,
Yeah, I love that analogy.
not chasing butterflies that disappear as quickly as they appear.
Right, exactly.
Yeah. This reminds me of something Warren Buffett,
Oh, yeah.
Graham's most famous student, once said.
What's that?
Someone's sitting in the shade today because someone planted a tree a long time ago.
That's a perfect analogy.
Yeah.
Building wealth takes time, patience,
Yeah.
and a willingness to delay gratification.
Right.
It's about making informed decisions
Yeah.
based on careful analysis
Right.
and resisting the temptation to get rich quick.
So if we zoom out a bit,
Yeah,
what are some practical steps
Yeah.
listeners can take
right.
to become more intelligent investors?
First and foremost, do your homework.
Okay.
Don't just blindly follow the crowd or buy into the latest market hype.
Right?
Take the time to understand the businesses you're investing in,
Okay.
read their financial statements,
Mm-hmm.
analyze their industry, and assess their long-term prospects.
So it's back to that core principle of value investing.
Exactly.
Understanding what something is truly worth
Absolutely.
before you buy it.
Yeah.
Okay.
Second, always remember the margin of safety.
All right.
Don't overpay for an investment,
Okay.
even if it's a company you love.
Right.
Look for opportunities to buy at a discount,
Okay.
giving yourself that crucial buffer
Yeah.
against uncertainty.
And that ties back to controlling your emotions,
Yeah.
right? Not letting fear or greed drive your decisions.
100%.
Okay.
Third, diversify your portfolio.
Okay.
Don't put all your eggs in one basket.
Right.
Spread your investments across different asset classes, industries, and even geographies to reduce your risk.
This reminds me of another one of Buffett's sayings.
Oh, let's hear it.
Diversification is protection against ignorance.
It's a brilliant way to put it.
Yeah.
You might not be able to predict
Right.
which specific investments will outperform.
Yeah.
But by diversifying,
You're ensuring that a single misstep won't sink your entire portfolio.
so we've covered a lot of ground here. Value investing, the
Mm.
margin of safety, emotional control investment versus speculation and diversification.
Yep.
But is all of this still relevant
That's a good
in
cheat.
today's fast-paced, tech-driven market?
Yeah.
Some people would argue that,
Right.
Graham's principles are outdated,
Uh,
that the game has changed too much.
That's a valid question,
Yeah.
and it's something we'll explore further when we come back after the break.
We were just talking about whether or not, Graham's principles are still relevant
Right.
in today's market.
Well, it's true that the financial landscape
Yeah.
has evolved dramatically since Graham's time.
Yeah.
But here's the thing.
Okay.
Human psychology hasn't changed.
Right.
We're still driven by the same emotions,
Right.
fear and greed,
Mm-hmm.
and those emotions continue to influence market behavior.
Creating those cycles of boom and bust that Graham so astutely observed.
So you're saying that, like, while the tools and technologies may have changed,
Mm-hmm.
the underlying principles of how markets work
Yeah.
and how investors behave
Yeah.
are still very much in play.
Absolutely.
Okay.
And this is why the intelligent investor remains so timeless.
Yeah.
It's not like a manual on specific trading strategies or
Right.
investment vehicles.
Yeah.
It's a framework for thinking about investing
Okay.
rationally, objectively, and with a long-term perspective.
It's like having a mental model
Yeah.
for navigating the market's complexities,
Right.
regardless of what the latest trends
Yeah.
and technologies might be.
Precisely.
Yeah.
And this brings us back to one of Graham's most powerful insights.
Okay.
The stock market is filled with individuals who know the price of everything but the value of nothing.
Yeah,
Right.
that really hits home.
Yeah.
It's so easy to get caught up
Right.
in the
Yeah.
daily stock ticker and forget
Yeah.
that behind those numbers
Yes.
are real businesses with
Absolutely.
tangible assets, products, and services.
Right. So that's why it's so important to develop what Graham calls an investor's attitude.
Okay.
It's about shifting your focus from short-term price fluctuations
Right.
to the long-term value creation
Yeah.
of the businesses you're investing in.
So it's about becoming a business analyst
Absolutely.
as much as a stock picker.
That's a great way to put it.
Okay, now we've talked a lot about the sort of the analytical side of
Mhm,
investing,
mhm.
but Graham also emphasizes the importance of temperament.
Oh, this is huge.
He argues that the intelligent investor's greatest asset
Yeah.
is not their intellect,
Right.
but their emotional discipline.
That's a crucial point.
Yeah.
Remember, investing is as much a psychological game as it is a financial one.
Right,
If you're easily swayed by fear or greed,
right.
you're likely to make impulsive decisions that will hurt your returns in the long run.
So how do you cultivate that
Yeah. How do you do that?
emotional discipline? You can feel like a constant battle
It is.
against our natural instincts.
Well, it starts with understanding your own biases
Okay,
and tendencies.
okay.
Are you prone to overreacting to market swings?
Mm-hmm.
Do you get caught up in the fear of missing out?
Yeah,
Once you're aware of your weaknesses,
yeah.
you can start to develop strategies to counteract them.
It's like having a pre-flight checklist for your emotions
Yeah, I love that.
before making any investment decisions.
I love that analogy.
Yeah.
And remember, building emotional discipline takes time and practice.
Wow.
It's a continuous journey,
Right.
not a destination.
So as we wrap up this this deep dive into the intelligent investor,
Yeah.
what's the most important message you hope our listener takes away?
I think it boils down to this. Becoming an intelligent investor is not about mastering complex formulas
Oh, yeah.
or predicting the market's every move. It's about developing a sound investment philosophy,
Right.
grounded in principles of value, patience,
Yeah.
and emotional discipline.
Mm-hmm.
It's about thinking independently, doing your homework, and making decisions that align with your long-term goals.
It's about taking control of your financial future
Yes.
and building a portfolio that will weather the inevitable storms
Exactly.
and deliver sustainable returns over time.
You got it.
Well said.
That's what we're here for.
So to our listener out there,
Yeah.
we encourage you to embrace the principles of the intelligent investor,
Absolutely.
not as like a rigid set of rules,
Right.
but as a guiding framework for your investment journey.
It's a journey.
Remember, knowledge is power,
It is.
and the more you learn,
Yeah.
the more confident and successful you'll become.
Could have said it better myself.
Well, thanks for joining us on this deep dive.
It's been a pleasure.